Welcome to the deep dive.
Great to be here.
Today, we're doing something a bit focused. We're tackling a single piece of trading advice.
Yeah, just one tip, but it's potentially, quite impactful.
It comes from Mansi's Trading Tips, number 66 specifically.
And our goal really is just to break this down, to really get into what it means for how you handle the market.
Exactly. How you navigate those ups and downs.
Yeah.
So Mansi's tip 66, let me just read it out. If the market is down by 300 points, it can further go down by another 300 points or more.
Right.
Do not try to outsmart the market. Same applies for up move. Be careful if you have a tendency to go against the trend.
Okay.
So let's unpack that. Seems simple, maybe?
On the surface, yeah. But there's, I think, a lot packed in there.
A ton of practical wisdom, for sure.
What strikes me is just how blunt it is.
Yeah.
It really cuts through a lot of the noise, the speculation you hear all the time. The core idea is basically respect the market's momentum, its current direction.
Just because it's moved a lot.
Doesn't mean it's finished. Not automatically. It's like, think of a snowball rolling downhill.
It keeps going, gathers more snow.
Exactly. It can pick up speed, get bigger, the move can continue.
Right, and that temptation, you see a stock falling fast.
You want to jump in.
You think, okay, this must be the bottom, it has to bounce.
Or the opposite, a market just keeps climbing and climbing.
And you think, this is crazy, it's got to fall.
Mansi is basically saying, whoa, hold on a second there.
Yep, pause. Think. Because this is where it gets really interesting, I think. Our human tendency. We often think things snap back, revert to some average.
That's a huge bias, mean reversion.
We see a big drop, and our gut says, overreaction. It's coming back up.
That's such a key point about intuition versus market reality. We look for balance, equilibrium.
But the market doesn't always provide that immediately.
Not at all. You can have these really powerful forces at play, big economic news, shifts in sentiment.
Global events.
Right. All sorts of things. And these can keep a trend going much, much longer than maybe you or I as individuals might expect.
Like a really good or bad earnings report from a major company.
Perfect example. That can create sustained pressure, up or down, as everyone revises their thinking.
So trying to outsmart the market, like the tip says, by just going directly against a really strong trend, down or up. That sounds like a very, very risky move.
It absolutely can be. It's like trying to, stand in front of a speeding train and tell it to stop.
Or argue with a hurricane, maybe?
Yeah, something like that. And the second part of the tip, it flags something important about us.
Our psychology.
Exactly. That tendency some people have to counter-trade, to go against the flow.
The contrarian instinct.
Right. And look, being contrarian isn't always bad. It can be valuable sometimes.
Sure, at the right moments.
But this tip is a strong warning against automatically doing it, especially against strong, established trends.
Just because everyone else is going one way doesn't mean they're wrong right now.
Precisely. The appeal of being the one who called the turn, who caught the exact top or bottom, it's powerful.
Oh yeah, bragging rights.
Totally. But it needs solid reasoning behind it, not just a gut feeling that, it's gone too far.
So, okay, let's bring this back to the listener. What does this mean for you?
Well, it's a reminder, isn't it? The market isn't running on your personal schedule or your feeling about when a trend should be over.
Yeah, a big drop doesn't automatically equal buy.
And a sharp rally isn't automatically a signal to short everything.
It connects to risk management, right?
Absolutely. Mansi's advice really underscores how important it is to sort of align your strategy with what the market is actually doing.
Not what you wish it was doing.
Exactly. Fighting a clear trend just ramps up the odds of being wrong, potentially badly wrong.
History is full of stocks that dropped 80%, 90%.
And then kept going down, defying that expectation of a quick V-shaped recovery.
It's not saying trends last forever, though. That's important, too.
No, of course not. Trends do eventually end. They reverse.
But the point is
that trying to nail that exact moment, the absolute peak or trough, that's a really tough game to win consistently.
you risk getting caught, swept away by the current.
Yeah, you can get run over by these moves that can be surprisingly powerful and last a long time.
So this raises a question, maybe a self-reflection question for you listening.
Which is?
Are you aware of your own tendencies? Do you often find yourself trying to pick those exact turning points?
That's crucial. Knowing yourself as a trader or investor, understanding that tendency, if you have it, is step one.
And maybe then adjusting your approach to factor in Mansi's warning.
It suggests a certain humility is needed.
Yeah, I think so.
Yeah.
Recognizing the market is huge, complex.
Much bigger than any one person's prediction.
So trying to force your view onto it instead of listening to it, respecting its momentum.
That can be an expensive way to learn.
Definitely.
It's fascinating, isn't it? Such simple advice.
Be that simple.
But the implications are pretty deep. It's just a constant reminder, pay attention to what is, not just what you hope or predict will be.
Absolutely. Okay, so let's try and boil this down. The main takeaway from Mansi's trading tip 66.
It's respect the trend's power. Simple as that, really.
When the market's moving strongly one way, assume it might keep going.
There's a real chance it will. So be really, really careful if your whole plan is just betting directly against that momentum.
Don't try to call the absolute top or the absolute bottom.
Avoid that temptation. And maybe seriously think about trend following as a valid approach.
And be honest with yourself. Do you have that contrarian itch just for the sake of it?
Know thyself.
Right. Okay, so that leads us to maybe a final thought, something for you to consider.
Go for it.
How does this understanding of market momentum, this idea from Mansi's tip, how does it influence your approach?
Not just to maybe short-term trading.
Right, but to your bigger investment picture. How you think about managing risk when things get volatile.
Yeah. How does respecting the trend fit into your overall strategy? Something to really mull over.